Joining us for a closer look at what's played out on the market scene today is Zwelakhe Mnguni from Benguela Global Fund Managers and Nick Kunze from Sanlam Private Wealth. Gents, thanks so much for joining me this evening. So really unprecedented times. The national budget, of course, being delayed and now set to be tabled on the 12th of March. Let's start there. What does this do to sentiment? I mean, especially because there was a really improved sentiment post the national budget, with investors really liking the GNU, dubbing it as business friendly. Now we are seeing these, these squabbles taking place. What does that do to sentiment? Zwelakhe, let's start off with you.
Yeah, thank you. I think Nick and I were talking about it. I mean, there's obviously positives and negatives. The negative is that it may suggest that there's a lot more things broken behind the scenes. Because why did it take so long for them to come to a point that they can't do this budget, they can't table the budget now? I mean, it just says that there is something dysfunctional about the process. The cabinet should have approved the budget. Was it approved or not approved? I mean, that's one side. So there is a question mark around the dysfunction. On the other side, as Nick and I were talking about it, that there is an element of checks and balances, this pushback. So it does look like, from that point of view, there is accountability. But I do think that overall, I feel a bit negative about it. I think it's not a positive thing.
I mean, Nick, Zwelakhe touching on the fact that you and him were talking about this off air. When my colleague and I were talking about what was playing out in Germany, where the coalition government was at loggerheads over the budget. Fast forward to this year, they're heading into a snap election. I know that might not happen here, but is this not just a cause of concern? Does this not worry you?
Okay, so I mean, let's start with things we do know.
Yes.
So first and foremost, you look at what the rand did today. I mean, you looked at your board that you pulled up there, 0.7% move in the rand dollar. That's nothing. Mexico says something and the peso moves 2%. The Argentinian moves 2-3% on their currencies. 0.7% is really, I think, says a lot of positives. Although, with a caveat that maybe we don't know all the news out, all the sort of detail yet. But what we do know of that's coming out in the news flow from the lack of the budget is, to pass what supposedly a 2% VAT increase is, I mean, that's just suicide. It's never going to happen. It's never going to happen in a country like South Africa. We are so supportive of the poor, so many people on social grants. You can't push through a 2%, despite whatever basket freezes, whatever you want to do. It's never going to happen. So, I mean, that is, I guess, it is a positive that they're pushing back on it. But, it's not good for sentiment, as you said on to start with. It's just not good for sentiment to have, budgets not being passed. And I guess it'll take a few days to dissect the news, see what it does, keep an eye on the SA bonds, see what they do, because the foreigners buy and sell those with abandon. Let's see what happens. But overall, I'd say it's steady to negative, I agree.
And you mentioned the rand there. There was fears around the rand going lower. I think when I looked at it in the morning, it was around 18.33, and then post that announcement, just over 18.50. And as you mentioned, not really a significant move. I was looking at the JSE as well. As you saw those on the screen, it was red across the board. And I thought to myself, it's probably just also, sentiment from international markets as well, because we do have the trade jitters in play. But I think what caught my eye the most was the retailers, particularly the clothing retailers, which were really, really punished. And I asked myself, is this on the back of, the prospects of a 2% VAT that could be passed through, and how that would, just further weigh on the purchasing power of the ordinary South Africans? Zwelakhe, just your take on that.
Yeah, look, I mean, I agree. I think a 2% VAT increase would be ridiculous, and the retailers would be affected. I think it's something that says, the government is on the ropes to some extent to plug the gaps in their budget. So the retailers are suffering because you're transferring money to the government, and not all of it would be used fruitfully, as we know. So I do think that it would slow down the spending and it would affect the retail earnings.
All right, let's look at what's happening on the global front. As mentioned, it seems like those trade jitters are back yet again. I mean, Nick, would you not say, we markets should have perhaps started pricing this in? Because we do know that one day Trump says one thing, the next day he says something else. I would have expected markets not to react as much as they do now.
So, I thought politics were a little bit boring in South Africa until we got the budget delay. But Mr. Trump's still commanding the news flow. It is important. He does head up the world's biggest economy. What he says does matter. And unfortunately, until we understand where they are with the tariffs, every single point is going to move the markets. And in fact, I saw an article on one of the financial channels saying like all the movement at the moment is happening on a Sunday night in New Zealand because he speaks from Mar-a-Lago on a Sunday, and you can't trade those moves until certainly when the market opens in New Zealand. So they're getting all the trade. So it does make a difference. We probably get if you look at what happened in the first term, we certainly got a couple of months of this first before the reciprocal tariffs came and went and what's going to happen. And I thought he said he was going to give 30 days or a month for Canada or whatever it was. So we're not there yet. So maybe after that we get an idea. But unfortunately, investors and those who've got things in the market get used to it. We've got what do we know? 3 years and 49 weeks to go. Enjoy it.
Do you know what? I've been saying this.
I'm so tired.
It's going to be a long 4 years. And I thought it would just be a long 4 years internationally, but it seems like a long 4 years here at home.
There's actually some cruise line. There's a cruise line offering a 4-year cruise. So you go on the cruise, there's no news flow, and they drop you off back in New York 4 years later.
I think we should all go.
I'm actually going to price it up. Yeah.
I think we should all go. As well, let's talk about tariffs in relation to inflation. We are getting those Fed minutes later tonight. How concerned are you about, that ripple effect of these increased tariffs and how that could follow through into global inflation, and then also just weigh on monetary policy moving forward, considering the kind of moves we've been seeing from the Fed recently?
Yeah, look, I think the immediate impact on inflation probably be non-existent. I think what will happen is it will take time for these things to filter through into the supply chains and then start hitting the consumer. But I think it is inflationary. So you increase in tariffs or you put in tariffs on products that the importer essentially has to put up the price to basically make up for that. And that's how it will feed into inflation. On the other side, it may affect consumption and slow down the consumption. And that is where the risk is. I mean, the market's grappling with how much of these tariffs would actually push inflation higher and how much would that offset the real growth in the economy. So there is a risk that you see a bit of a slowdown in the global economy as these things take effect. But I don't think there is an immediate panic that one should have about it.
So basically, the Fed, like any other central bank, just playing it with caution, like they all do, even though Lesotho Kganyago does the same thing, our governor here at home. Nick, around that, the conversations around monetary policy, particularly when it comes to Fed Chair Jerome Powell, he's been asked many a times to comment around the tariffs and the impact that it could have. Do you think perhaps that we might see some commentary around that from the minutes we get this evening?
I think Mr. Powell and his monetary policy committee have been pretty good in that they've stuck to the narrative. Doesn't deviate. He's been asked numerous times, Mr. Trump wants to fire you. He says he knows more about interest rates than you, blah, 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 blah. He's just stuck to the narrative. He says we're data dependent. They look at the numbers. And I agree. Immediately, maybe not inflationary, but ultimately you've got to think these tariffs are inflationary, which is maybe why the Fed has taken a bit more cautious stance. And maybe the minutes you'll see a bit more commentary on it. Maybe there's a couple of dissenters about those rates. Because don't forget, about a year or so ago, we were pricing in, 5 or 6 interest rate cuts. And now they're pricing in 25 basis points this year. So that's a huge sea change from where it was from. So rates are going to stay higher for longer, and I think you'll see that in those minutes tonight. So they're going to play this accordingly, and you know, I think the other thing to keep an eye on as well is you know, America, contrary to the popular belief, they don't really want a stronger dollar. Stronger dollar is not great for America. Mr. Trump does not want a stronger dollar, but the moment it's got the reserve currency sort of backup of the world, and it's maintaining a strong. Ultimately, they want to see that dollar weaken. So yeah, maybe we get to see that. Maybe there's commentary in the Fed minutes, but I think they're going to stay exactly what they're doing, and I think all of us better get used to a dollar that's probably going to be stronger for a little bit longer for now, and a Fed that's probably going to keep rates higher for a little bit longer for now.
All right, let's shift focus to some company news. We could talk about all the macros for the whole period, but we do have some company news coming through. Earnings season really heating up. We are seeing the miners really posting lower profits, with the exception of the gold miners. Of course, Glencore also reporting downbeat profit on the back of lower metal prices. And I guess this expected, right, Zwelakhe?
Yeah, look, I think, I mean, if you look at the prices, I mean, Glencore, the energy coal price has come down, and that has fed through into the numbers. So I do think that that was more or less expected. I mean, they did seem to be holding the rest of the portfolio relatively well so far. But I mean, you look at others. I mean, Sibanye, they're also battling to keep it together. I mean, they've made their business very, very complicated. I mean, they operate in 5 continents, and it's become quite a complicated business. And I think Sibanye is a case study on capital investment intensity, where they went so aggressive into what they call green metals that they set up a lot of the excess cash that they had on the balance sheet, and they've gone into debt. And at a time when prices came down, so the PGM prices came down, and that hurt them. So it is something that is, I think, a challenge, and that'd be more specific to Sibanye. So that intensity was way, way, way too hard. And I was laughing that probably only Neil Froneman can run this company.
I was thinking the same thing. I was like, he's leaving at such a dire time. You know, the next person needs to really turn the ship around. And with these prices, it's going to be very, very complicated. Nick, I wish I could get your take on this, but we have run out of time. So I'm going to get into your stock picks quickly. What is your pick for tonight?
Positively boring after all the chat. So going for clicks, going local. Like the click story we do, it is on the defensive side. They've been a good allocator of capital. Incidentally, with all this tariffs and trade wars we're talking about, they don't operate outside the borders. They're specifically South Africa facing only. And on the latest trading update back in January, it wasn't great, but they certainly indicated that they were going to grow close to double digit, maybe 10 times earnings growth. And the P is a little bit demanding, but I think going into again, these uncertain times, it's a nice defense of local is lacquer.
So an SA Inc. stock for you, Zwelakhe. We've got about 20 seconds to go. What's your pitch?
I'll go with Cisco Food Distribution, predominantly US, very good company, well run. And I think as we move forward into the future, the US would likely remain strong as an economy, and I think that slant or the bias in their portfolio would probably be beneficial to them relative to other food service companies.
Gents, thanks so much for joining me and coming through into studio. That was Zwelakhe Mnguni from Benguela Global Fund Managers and Nick Kunze from Sanlam Private Wealth.